Good morning, traders, and welcome to BCR's morning market analysis. First up, let's talk about the US dollar. The DXY is trading below 98.5, attempting a modest recovery after last week's decline as renewed tensions in the Middle East followed the failure of US-Iran peace talks. The earlier sell-off was driven by easing tensions during the temporary ceasefire alongside falling US Treasury yields. From a technical perspective, the index is hovering near the key support at 98.52, which aligns with the 200-day moving average. A break below this level could shift the outlook bearish towards 98. On the upside, resistance is seen at 99.31 and 99.69. Positioning data suggests new long interest is building, indicating some room for upside despite recent weakness. Next up, let's have a look at crude oil. WTI is trading near 92.7, powering earlier gains as markets weigh conflicting signals around the US-Iran negotiations. Despite the lack of a deal and the announcement of a blockade, hopes for resumed talks have limited upside momentum. Fundamentally, supply disruptions remain significant, with OPEC output falling sharply and energy prices continuing to feed into inflation. Technically, WTI is in a consolidation phase with narrowing Bollinger Bands and weakening momentum. Key resistance stands at $100, while support is seen around 92 to 85. A break above 102 could open the path towards 110, followed by 120. Next up, let's have a look at gold. Gold is trading around 47.40 after opening lower as failed US-Iran talks and renewed geopolitical tensions keep markets volatile. Despite a brief rebound last week following a temporary ceasefire, uncertainty remains high after negotiations broke down. Technically, gold maintains a neutral to slightly bearish bias, capped below resistance at 48.68 and 49.08. A break above this zone could push prices towards $5,000. On the downside, support is seen at $46.71, followed by $4,600. Momentum indicators are suggesting weakening bullish strength in the short term. Lastly, let's have a look at the Australian dollar, which rebounded sharply to around 70.89 after dipping near 69.90, supported by improved risk sentiment and a softer US dollar as markets reassess geopolitical developments. From a technical standpoint, the pair is holding above the key 70-cent level, with buyers defending this zone. RSI has recovered into the 50 to 55 range, indicating improving momentum, although MACD remains slightly negative. Resistance is seen at 70.95 and 71.61, while support lies at 70 cents and 69.66. That's all for today's morning market analysis. As always, manage your risk and happy trading.